Hi, I'm Tom Lydon, editor of ETF Trends here in New York at the iShares Connect conference. And I'm here with Michael Jones, Chairman and Chief Investment Officer of Riverfront Investment Group. Great having you with us, Michael. Thank you.
Great to be here, Tom.
So you folks, one of the larger ETF strategists out there, how many different portfolios do you folks have?
We have 6,
Okay.
all the way from very conservative 2-year type time frame, mostly fixed income portfolios,
Right.
to 10 plus year all equity.
Okay, so you've got the balance a little bit for everybody, but I want to get right to the markets. If you look at equities on a global basis, where do you folks see the biggest opportunities right now?
Well, it's important to recognize that with last year's rally in the US, we're back to fair value.
Okay.
So prices are dead average and clients need to start expecting an average kind of return. If you want excess return, you're going to have to take a little bit more risk. Right now, where we see about 20 to 25% undervaluation is in developed international,
Okay.
Europe and Japan. Makes sense they would be cheap. They've been in recession the last 2 to 3 years. Markets get 20 to 25% cheap in recession. Now that the US is fair value, you're going to get 6 to 7 over inflation.
Yeah.
Europe, you're going to get 6 to 7 if they stay in recession.
Yeah.
If they come out, you can have the kind of pop that we had last year in the US.
Right, so are you starting to shift assets a little bit more globally?
Without question, we're putting more in developed international. Some of that we are actually taking a little bit away from emerging markets to fund a little bit more in developed international.
Interesting, interesting. Well, let's jump over to the fixed income markets. Here in the US, we're a little bit up in arms. You know, it doesn't seem like the bond market can make a decision. So how are we looking here, and then where are the opportunities overseas?
The most important driver of our strategy is price matters. That's the one thing you don't have to guess about in these markets is what price are you paying. In bonds, you're paying an incredibly high price, you're getting an incredibly low yield. Historically, the very few times in history when yields have been this low, over the next 5 years, you've lost money 100% of the time. So those aren't great odds. So when you look in our portfolios, we really don't have any investment grade bonds beyond 3 type year maturities.
Okay, so short maturities.
Short maturities.
Including overseas, or is it a different story there?
Yeah, overseas, we are very interested in, although we're not that excited about emerging market equities, we're starting to get increasingly interested in emerging market fixed income. Their central banks have been raising interest rates, have been trying to slow inflationary pressures. That is not a great thing for equity investments in those markets, but they're starting to get high enough, and they're starting to get a big enough spread between US rates, European rates, and emerging markets. We're getting very interested in the bonds overseas in emerging markets.
And with ETFs that are available out there, enough choices for you to be able to satisfy what you're looking for?
Yeah, the wonderful thing about the explosion in ETF innovations is you can access almost any asset class you want in a very diversified liquid ETF package.
That's great. Michael, thanks for being with us today. Appreciate
Absolutely,
it.
my pleasure.